All right, so let's talk about Stellar, or XLM. Back in September, you might have seen its price pop, jumping almost 8%. Looked pretty good on the surface, right? But here's the thing, the story behind that rally is not at all what it seems. So we did something kind of cool. We fed all the on-chain data to an AI to figure out what was really going on. And what it found? Well, it's pretty fascinating. Let's get into it.
So this really brings us to the big question. Was that 8% rally in September just an illusion? I mean, on the surface, an 8% jump in just a couple of weeks? That looks like a home run. But the AI analysis points to something else entirely. It suggests this little price pump might have been built on a very shaky foundation. Yeah, the numbers went up, but the story they're telling is way more complicated.
And to get to the bottom of it, an AI model basically put on its detective hat. It sifted through all that on-chain data. We're talking whale movements, money flow, the whole shebang. And it came back with 3 really surprising truths that totally change how you see what happened with Stellar's price. Let's take a look at the evidence it found. Okay, so let's break down these 3 key revelations from the AI. You can think of them as the clues that finally solve the mystery of what went down in September. All right, revelation number 1. And honestly, this one is a really big deal. The so-called whales, those massive wallets holding over $5 million, they weren't just quiet during this rally. They sat this one out completely. In fact, they were doing the exact opposite of buying. And this data from Sentiment? It tells the whole story. Just look at this. It shows that over the course of September, the biggest wallets actually increased their share of stablecoins, going from 55% to 59%. Now, to put that in plain English, they were cashing out. They were moving their money away from riskier assets like XLM and parking it in the safety of stablecoins.
So what does that mean? Well, it's pretty clear. This rally wasn't being driven by the big institutional money, the kind of money you need for real, sustainable growth. Instead, it looks like it was fueled by smaller retail buyers. And once that smaller scale buying dried up, well, the whole upward push just kind of ran out of gas and stalled.
Okay, on to revelation number 2. This is where things get a little weird. The market was sending out totally conflicting signals. The AI found this major disconnect in the data, where some things were looking up, but other indicators were flashing some pretty serious warning signs. It created a super confusing picture for anybody trying to figure out what to do.
And this slide really shows you that conflict perfectly. It's like a tale of 2 different indicators. On the one hand, you had the accumulation/distribution line, the AD, which rose to 1.72 billion. That signals that, yeah, some people were quietly buying on the spot market. But, and this is a big but, the Chaikin money flow, or CMF, finished deep in the negative, around minus 0.13. That tells us the broader river of money, the big liquidity, was actually flowing away from risk. Classic negative divergence.
And that brings us to revelation number 3, the final piece of the puzzle. It's simple, really. The price was going up, but there was no real power, no conviction behind the move. I love the analogy of a car trying to go uphill, but the engine is sputtering and about to stall. That's kind of what this was. And the analysis really nails it with this quote. XLM price recorded higher highs, but failed to register momentum. That's what we call a classic negative divergence. It's when the price chart is making you feel good, hitting higher highs, but the underlying strength indicators are going down. It is a huge flashing red flag that the trend is weak and probably isn't going to last.
Okay, so we've cracked the case on September. We know the rally was hollow. So now what? Well, using all these insights, the AI has mapped out 3 potential paths for Stellar's price in October. So here they are, the 3 possible scenarios. First, you've got the bearish case. If that low risk appetite continues, we could see the price test support down around 36 to 37 cents. Then there's the base case, which is kind of the meh scenario. The AI sees the price just hovering in this 40 to 41 cent magnet zone. And finally, the bullish case. A breakout to 45 or 46 cents is possible, but, and this is key, it would need a total 180 on the trends we just talked about. We'd need renewed demand and positive money flow.
All right, this might be the most important part. What signals should you be watching for? Because the AI didn't just give us a forecast, it gave us the specific clues, the tripwires, that'll tell us which of these scenarios is actually starting to play out.
And it's actually pretty simple. Here's your 2-point checklist to confirm if things are turning bullish. First, you need to see that Chaikin money flow, the CMF, turn positive.
That's your sign that money is finally flowing back in. Second, you have to see those whales start selling off their stablecoins. When their stablecoin share starts to decrease, it means they're buying back into assets like XLM. That is the real green light.
So let's just wrap this all up. September's rally? It looked good from a distance, but it was hollow. It was an illusion of strength without the backing of the big players or any real momentum. Looking ahead to October, the direction really all boils down to one simple thing. Are the big players, the whales, going to come back to the party?
So there you have it. The AI has laid out all the evidence and the potential paths forward. The data right now tells a story of caution, for sure, but it also gives us a crystal clear roadmap for what a real breakout would look like. So now that you've seen the AI's investigation, what's your call? What do you think comes next for Stellar?